Have you ever wondered why some people get filthy rich during the exact same economic disasters that destroy everyone else? While your neighbors were losing their homes in 2008, Warren Buffett was buying entire companies for pennies on the dollar. While small businesses closed during COVID, tech billionaires added $1.8 trillion to their net worth. Here's what's making you sick to your stomach right now. You've been working your tail off for years, doing everything you were told was right, but somehow you feel like you're falling further behind every month. Your coffee costs $6 instead of $4, your grocery bill doubled, your rent went up 30%, but your paycheck, still the same. That's not bad luck. That's a wealth transfer in progress, and it happens every 10 to 15 years like clockwork. 2008, 2000, 1987, 1929, the pattern never changes. The rich get richer, the middle class gets wiped out, and a new generation of millionaires emerges from the chaos. Today I'm exposing the exact playbook that billionaires use during every economic crisis, not the BS they tell you on CNBC, but the real strategies they deploy while everyone else panics. Comment wealth transfer if you're tired of watching others profit from your hard work, because what I'm about to reveal will change how you see every economic downturn forever. But first, let me show you why the deck has always been stacked against regular Americans. 1. The wealth transfer machine. Why the rich get richer when everything falls apart. Here's the brutal truth that no financial advisor will ever tell you. The American economic system is designed to transfer wealth from the emotional to the logical, from the reactive to the prepared, from the fearful to the fearless. And it happens like clockwork every single generation. Let me tell you about two neighbors I knew during the 2008 crisis. Dave worked construction, made $75,000 a year, and owned a nice house in Phoenix. When the market crashed and he heard all the doom and gloom news, Dave panicked. He sold his house for $180,000, $120,000 loss, just to get out before it got worse. Meanwhile, his neighbor Richard, a quiet accountant, was doing something completely different. He was calling bank after bank, making lowball offers on foreclosed properties. While Dave was selling at the bottom, Richard bought 3 houses that year for a combined $400,000. Today, those same properties are worth $1.2 million. Dave is still renting. Richard retired at 55. There's an ancient Roman principle: fortune favors the bold. But in America, we've been taught the opposite, that safety comes from following the herd, trusting the experts, and reacting to whatever CNBC tells us is happening. Warren Buffett learned this lesson from his mentor Benjamin Graham, who survived the 1929 crash by doing exactly what everyone said was crazy: buying stocks when they were falling. Buffett's famous quote wasn't just clever wordplay. Be fearful when others are greedy, and greedy when others are fearful. It's a mathematical formula for wealth transfer. Here's what happens every single time. Bad news hits the headlines. The media amplifies the fear. Regular Americans panic and sell everything at the worst possible moment. Meanwhile, the wealthy, who don't watch the news, who think in decades instead of days, start shopping. The difference isn't intelligence or luck. It's psychology. Poor people make financial decisions based on emotions and headlines. Rich people make decisions based on data and historical patterns. Your mindset shift starts today. Stop seeing economic downturns as disasters and start seeing them as wealth redistribution events where assets move from the unprepared to the prepared. But that's just the surface level, because there's a historical pattern that's about to repeat itself, and you need to see it coming. 2. The historical pattern. How every crisis creates millionaires. Here's something that will absolutely blow your mind. Every major economic crisis in American history has created more millionaires than the boom times that preceded it. Not despite the chaos, but because of it. Let me walk you through the pattern that's repeated for over a century. In 1929, when the stock market crashed by 89%, and unemployment hit 25%, most Americans were selling their belongings just to eat. But a small group of investors, led by people like John D. Rockefeller Jr., was quietly buying entire companies for the price of a used car. Rockefeller famously said during the crash, "These are the times when fortunes are made, not lost." Fast forward to 2008. While 6 million Americans lost their homes and the average 401k dropped 40%, Warren Buffett deployed $15 billion in 6 months. He bought Bank of America preferred shares, Goldman Sachs stock, and General Electric bonds when everyone thought these companies might collapse. 5 years later, those investments returned over 100%. But here's what really proves the pattern. During the 2020 COVID lockdowns, while 22 million Americans filed for unemployment, the number of new millionaires actually increased by 8.4%. Jeff Bezos alone gained $75 billion. Tesla's Elon Musk added $140 billion to his net worth. Zoom's founder became worth $11 billion overnight. The ancient Greek philosopher Heraclitus wrote, "Nothing is permanent except change." The wealthy understand this. They don't fight change. They position themselves to profit from it. There's a Japanese proverb that perfectly captures this. The same hammer that shatters glass forges steel. Economic crises don't create or destroy wealth. They reveal who was prepared and who wasn't. John Templeton, one of the greatest investors of the 20th century, built his entire fortune by buying stocks during World War II, when everyone else thought the world was ending. His strategy was simple. Buy when there's blood in the streets, even if it's your own blood. The pattern is so predictable that smart money actually waits for these moments. They don't try to time the market. They prepare for the inevitable cycle and position themselves to buy when everyone else is forced to sell. Right now, all the historical indicators are lining up exactly like they did before every previous wealth transfer. The question isn't whether it's coming, it's whether you'll be ready when it arrives. And the scary part is, most Americans are completely blind to the warning signs that are flashing red right in front of them. 3. The perfect storm. 5. Crisis signals happening right now. I want you to imagine you're driving down a mountain road at night and your headlights start flickering. Most people ignore the warning signs until they're driving blind off a cliff. The American economy right now has 5 warning lights flashing red, and most people are too busy scrolling TikTok to notice. Signal number 1 is the inflation lie they're feeding you. Your Starbucks went from $4.50 to $6.25. Your grocery bill increased 40% in 2 years. Gas jumped from $2.50 to over $5 in some states. But here's what they're not telling you. This isn't temporary inflation. It's permanent currency devaluation. When governments print trillions of dollars, every dollar in your wallet becomes worth less. It's basic math disguised as economic policy. Signal number 2 is the debt bomb that's about to explode. The average American household now carries $137,000 in total debt. Credit card balances are at all-time highs. The federal government owes $33 trillion and climbing. Student loans, car loans, mortgage debt, we're living in the biggest debt bubble in human history. And bubbles always pop. Signal number 3 is what I call the real estate reality check. Housing prices shot up 40% in 2 years, but now sales volume is dropping fast. Mortgage rates doubled from 3% to over 7%. New construction permits are plummeting. The smart money, the institutional investors who drove prices up, is quietly selling to retail investors who think they need to buy before they're priced out forever. Signal number 4 is the stock market casino. We've got wild swings up and down, retail investors betting their life savings on meme stocks, and everyone from your barber to your Uber driver giving you stock tips. This is classic bubble behavior, euphoria right before the crash. When shoeshine boys are giving stock advice, it's time to get out. Signal number 5 is the social mood shift that always precedes economic disasters. People are angrier, more divided, and less optimistic about the future. Consumer confidence is falling despite supposedly good economic numbers. Road rage is up, depression rates are skyrocketing, and everyone feels like something's wrong but can't put their finger on what. Sun Tzu wrote, "Know your battlefield before the war begins." These 5 signals haven't aligned this strongly since 2007. And we all remember what happened in 2008. But here's the thing. While everyone else will be panicking when this hits, there are 5 specific opportunities that emerge during every crisis that can make you wealthy if you know what to look for. 4. The Millionaire Blueprint. 5 crisis opportunities that create wealth. Most Americans will waste the biggest wealth-building opportunity of their lifetime because they're looking for problems instead of solutions. But there's an ancient Jewish teaching that says, "Who is rich? One who sees opportunity where others see only disaster." Every economic crisis in history has minted more millionaires than the boom times that preceded it. Here are the 5 opportunities that emerge like clockwork during every economic downturn. Opportunity number 1 is the asset fire sale. When people panic, they sell everything at any price. I'm talking about real estate 30 to 50% below value, quality stocks trading like penny stocks, and businesses liquidating inventory just to pay rent. This is when you become the buyer, not the seller. My friend Jessica bought a rental property in Detroit in 2009 for $45,000, which the previous owner had paid $180,000 for in 2006. Today, it's worth $160,000 and generates $1,800 monthly rental income. One smart purchase during a crisis can fund your retirement. Opportunity number 2 is the skills economy explosion. When companies cut employees to survive, freelancers and consultants absolutely thrive. Digital marketing, business consulting, financial planning, content creation, anything that helps businesses stay alive becomes incredibly valuable. During COVID, while restaurants were laying off servers, digital marketing consultants were making $10,000 per month helping businesses pivot online. Opportunity number 3 is the essential business boom. People stop buying luxury items but increase spending on necessities. Food delivery, healthcare services, home improvement, financial advice, education. Businesses that solve real problems during tough times print money. Think about it. During 2020, while luxury retailers collapsed, companies like Instacart and DoorDash exploded. Opportunity number 4 is the personal brand advantage. When everyone else goes quiet and stops posting content, those who keep creating and sharing value stand out dramatically. Crisis is when personal brands are built because there's less competition for attention. People need guidance, hope, and practical advice more than ever. Opportunity number 5 is the education arbitrage. Training costs drop, people have more time to learn, and those who upgrade their skills during downturns emerge with massive advantages when recovery begins. Warren Buffett spent the 2008 crisis reading and learning. His quote, "The more you learn, the more you earn." Charlie Munger put it perfectly. The big money is not in the buying and selling, but in the waiting and the knowing what to buy when the time comes. But here's the brutal reality. Even knowing these opportunities isn't enough, because there are 5 deadly mistakes that keep most Americans broke, even when wealth-building opportunities are staring them in the face. 5. The 5 deadly mistakes. Why young Americans stay broke during crisis. I've watched thousands of young Americans make the same wealth-destroying mistakes during every economic downturn. These aren't just bad decisions, they're psychological traps that keep an entire generation broke, while others get rich from the exact same circumstances. Mistake number 1 is waiting for the perfect time. I hear this constantly. The market's too volatile right now. I'll wait until things settle down. But here's what they don't understand. When things settle down, all the good opportunities are gone. The wealthy bought Amazon at $6 during the dot-com crash, not at $3,000 when it was safe. By the time young Americans feel comfortable investing, they're buying at the top from the smart money that got in at the bottom. Mistake number 2 is following the herd mentality. When they see people on social media panicking and selling, they panic and sell too. When they hear their coworkers talking about keeping cash safe, they do the same thing. They forget that following the crowd gets you crowd results. As Mark Cuban says, everyone is a genius in a bull market. A bear market reveals who's been swimming naked. Mistake number 3 is accepting mediocrity instead of adapting. I see young people staying in dead-end jobs making $15 an hour, afraid to learn new skills, afraid to ask for raises, afraid to start side hustles. They cling to fake security while the world changes around them. They don't realize that in a crisis, the riskiest thing you can do is nothing. Mistake number 4 is underestimating their own potential. I don't have money to invest. I don't have connections. I don't have experience. But some of today's biggest success stories started with nothing during economic downturns. Sarah Blakely founded Spanx with $5,000 during the 2000 recession. Brian Chesky started Airbnb during the 2008 crisis when he couldn't afford rent. Mistake number 5 is the most dangerous, thinking the crisis doesn't apply to them. They're still spending $200 a month on subscription services they don't use, buying clothes they don't need, going to bars every weekend, living like nothing's changed. They don't realize that right now, while the world is reshuffling the economic deck, is when their financial future is being decided. There's a harsh truth here. Your 20s and 30s during an economic crisis are either your launching pad to wealth or your trap into permanent financial struggle. The difference isn't your starting point. It's your response to the opportunity in front of you. But the good news is, even if you've made these mistakes, there's still time to turn things around. Because I'm about to give you the exact 6-step strategy that can help you break free from the pack and start building real wealth. 6. The 6-step breakthrough strategy. Your crisis action plan. To break free from the pack and build real wealth during this crisis, you can't just wing it. You need a step-by-step system that's been proven to work during every economic downturn. Here's the exact blueprint that separates those who struggle from those who thrive. Step 1. Cut the financial bleeding immediately. I'm not talking about extreme penny pinching. I'm talking about being smart. Stop paying for Netflix, Hulu, Spotify Premium, and 4 other subscriptions you forgot you had. Cancel the gym membership you use twice a month. Stop buying $15 lunches when you could meal prep for $3. My client Tom discovered he was spending $340 monthly on subscriptions and services he barely used. That's $4,180 a year that could be building wealth instead of funding corporate profits. Step 2. Build your opportunity fund, not just an emergency fund. Yes, you need money for emergencies, but you also need money for opportunities. When that perfect rental property hits the market at 40% below value, when that business owner needs a quick cash buyer, when that stock crashes but the company is solid, you want to be the person with cash ready, not the person saying, "I wish I could afford that." Step 3. Pick one high-income skill and master it like your life depends on it. Digital marketing, copywriting, video editing, web development, and business consulting. Skills that help businesses make or save money will always be valuable, especially during tough times. My friend Sarah learned Facebook ads during the 2020 lockdowns. Now she charges $5,000 per month per client and has a 6-month waiting list. Step 4. Start building your personal brand immediately. Create content around your expertise, share your journey, and document what you're learning. When everyone else goes quiet during crises, those who keep showing up get noticed. You don't need to be perfect, you just need to be consistent. Tony, a 28-year-old electrician, started posting home repair tips on TikTok. Now he has 200,000 followers and books $150,000 annually in side consulting work. Step 5. Find your Sherpa. Someone who's already climbed the mountain you're trying to climb. Don't try to figure everything out alone. Follow people who've built wealth during previous crises. Read their books, take their courses, and join their communities. One piece of advice from someone who's been there can save you years of mistakes. Step 6. Take action immediately, even if it's imperfect. Don't wait until you have all the answers, all the money, or all the confidence. Start with what you have, where you are, right now. Write that first blog post, send that first cold email, make that first investment, learn that first lesson. Everything big starts small, but it has to start. But here's the thing, your strategy needs to match your life stage. Because what works for a 25-year-old single person won't work for a 45-year-old with kids and a mortgage. 7. The age-based playbook. Crisis strategy by life stage 1. One size doesn't fit all when it comes to crisis strategy. Your age, responsibilities, and life stage completely change how you should respond to economic chaos. Here's your playbook based on where you are right now. If you're 1825, this is your golden opportunity disguised as a crisis. You have the ultimate advantage, time and flexibility. You're not locked into a mortgage, you don't have kids depending on you, and you can take calculated risks that older people can't. This is the time to be aggressive, not conservative. Instead of trying to land a safe, corporate job, use this crisis to develop high-value skills. Learn coding, master digital marketing, become a content creator, and start a side business. Fail fast, learn faster, and don't be afraid to experiment. The Roman philosopher Seneca said, "It's not what happens to you, but how you react to it that matters." Your reaction in your 20s during a crisis sets the trajectory for your entire financial life. If you're 26-35, you're in the pressure cooker years. Career building, relationships, maybe kids, definitely more financial obligations. But don't let pressure become an excuse for playing it safe. This is actually when you have the most earning potential and should be most strategic about building wealth. Focus on optimizing your income. Negotiate that raise, switch jobs for better pay, start that consulting side hustle. Buy your first rental property when prices drop. Max out retirement contributions when the market's down. Make the big decisions now that will compound for decades. If you're 36-50, you have experience and resources that younger people don't. You understand how business works, you have professional networks, and hopefully some capital to deploy. Your strategy should be steady and calculated. Protect what you've built, but don't be so conservative that you miss opportunities. Focus on cash-flowing assets, rental properties, dividend stocks, maybe buying a profitable small business. This is also the time to teach your kids about money so they don't make the mistakes you made. If you're over 50, preservation becomes more important than growth, but don't go completely defensive. You've lived through multiple economic cycles and should use that wisdom. Simplify your investments, avoid speculative plays you don't understand, and focus on assets that provide steady income. But here's what many people miss. Your experience and knowledge are incredibly valuable. Consider consulting, teaching, or creating content around your expertise. Some of the most successful second career entrepreneurs started after 50. The ancient Chinese strategist Lao Tzu wrote, "A journey of 1,000 miles begins with a single step." Regardless of your age, the key is taking that first step based on where you actually are, not where you wish you were. Your age doesn't disqualify you from building wealth during this crisis. It just changes your strategy. But there's one more piece of the puzzle you need to understand: how the ultra-wealthy actually prepare for these moments. 8. The Billionaire Preparation Secrets. How the ultra-rich get ready. Here's what separates billionaires from everyone else during a crisis. They don't wait for the storm to pass. They prepare for it years in advance. While regular Americans are panicking about what's happening now, the ultra-wealthy have been quietly positioning themselves for this exact moment. Secret number 1. They treat cash like ammunition. not security. Warren Buffett's company Berkshire Hathaway sits on over $140 billion in cash, not because he's scared, but because he's prepared. When assets go on sale during a crisis, cash becomes a weapon. While everyone else is forced to sell at the worst possible time, billionaires become the buyers with ready money. Secret number 2, they never depend on a single income source. Elon Musk doesn't just run Tesla. He has SpaceX, Neuralink, and multiple other ventures. Jeff Bezos doesn't just own Amazon stock. He has Blue Origin, real estate, and investments across dozens of sectors. When one income stream gets disrupted, they have 5 others keeping them afloat and growing. Secret number 3, they make decisions based on data, not emotions. During the 2008 crisis, while regular investors were panic selling, Warren Buffett was buying bank stocks because the numbers told him they were undervalued. He famously said, "Be fearful when others are greedy, and greedy when others are fearful." They have predetermined strategies and stick to them regardless of headlines or market hysteria. Secret number 4, they never stop learning. Bill Gates reads 50 books per year. Warren Buffett spends 80% of his day reading. Charlie Munger, at 99 years old, still studies new industries and investment strategies daily. They treat knowledge like compound interest. Every piece of information builds on the last, creating exponential understanding over time. Secret number 5, they build networks with other wealthy, smart people. When a crisis hits, they share opportunities, co-invest in deals, and support each other's ventures. While regular people panic alone, billionaires have a brain trust of advisors and partners, helping them navigate challenges and spot opportunities. Secret number 6, they think in decades, not months. Ray Dalio looks at 10-year economic cycles. Jeff Bezos built Amazon for day one, thinking that lasts forever. They accept short-term losses for long-term gains, understanding that true wealth is built slowly and systematically, not through get-rich-quick schemes. The ancient philosopher Marcus Aurelius wrote, "Confine yourself to the present." But billionaires flip this wisdom. They confine their worries to the present while keeping their strategies focused on the future. Here's the beautiful truth. These aren't secrets available only to people born with trust funds. These are learnable strategies that anyone can implement, regardless of their starting point. The only question remaining is, will you use this knowledge to join the next generation of wealth builders, or will you watch from the sidelines while others profit from the greatest wealth transfer of your lifetime? There you have it, the complete playbook that billionaires use to get richer during every economic crisis while everyone else gets poorer. We've covered the wealth transfer pattern that repeats every 10 to 15 years, the 5 warning signals flashing red right now, the 5 opportunities that create millionaires during chaos, the deadly mistakes that keep people broke, the 6-step action plan, age-specific strategies, and the billionaire preparation secrets. History is about to repeat itself. The same economic forces that created the millionaires of 1929, 1987, 2000, and 2008 are lining up again. The only question is, which side of the wealth transfer will you be on? You're standing at the exact same crossroads as every generation before you. You can join the 90% who panic, make emotional decisions, and spend the next decade recovering from this crisis. Or you can join the 10% who prepare, stay calm, and use economic chaos as their wealth-building opportunity. The next 12 to 18 months will determine your financial future for the next 20 years. Start building your opportunity fund this week. Pick one high-income skill and master it. Begin creating content in your area of expertise. Identify the assets you want to buy when prices crash. Comment Wealth Builder if you're ready to stop being a victim of economic cycles and start being a beneficiary of them. Share this with someone who needs to stop panicking about the future and start preparing for it. Should I reveal the exact assets I'm accumulating right now for the next crisis? The specific recession-proof businesses that thrive during downturns? The step-by-step investment strategy for the next 24 months? because the next wealth transfer is coming whether you're ready or not. Your future self is counting on the decision you make right now.